DocuSign reported fiscal year 2024 first quarter earnings results after the markets closed on June 8th. In this video, I'm going to provide an overview, a highlights feature of DocuSign's latest earnings results. I'm also going to update my buy recommendation on DocuSign stock. Remember, DocuSign coming into these earnings results was one of my top stock picks to buy in 2023. I will let you know after these earnings results if there was anything in here that caused me to change my recommendation. But before I get into the figures, let me just point out the fact that fiscal year 2024, you might be asking, what? We're in 2023. I know. This is an annoying feature of some companies when they report their earnings. Some companies are in fiscal year 2024, even though we're in calendar year 2023. This is just an annoying feature of the way they're allowed to report their results. Try to ignore that fact. It's just the way it is. All right. So let's get into the earnings results. Revenue increased by 12% to 661 million. Earnings per share improved to 0.00 compared to a loss of 14 cents in the same quarter the last year. DocuSign did an excellent job controlling costs, actually decreasing sales and marketing spending, and then still increasing its revenue by double digits. Excellent performance there by DocuSign in the most recent quarter when many investors were looking for improved profitability, improved cash flow. DocuSign was able to deliver on those two very critical metrics right now. Billings increased by 10% to 675 million. Now, billings is a feature for companies like DocuSign who sometimes make sales on products that haven't been consumed yet. For instance, DocuSign might make a sale for 100 e-signatures, and DocuSign may not be able to record that revenue until the company that they sold it to actually uses up those 100 signatures. Or they might record that revenue as 1/10 revenue for the next 10 months or 1/12 revenue over the next 12 months. In any case, what billings means is that they are contracts signed, sales made, but they can't record that as revenue until the company that bought that contract actually consumes what they purchased, right? Think of it like a magazine subscription. You might buy an annual magazine subscription, pay for it all at once in January, but you get one magazine every month for the rest of the year. That magazine company will recognize revenue 1/12 every month for the rest of that year, even if you paid for your full subscription in January. I hope that makes sense. Cash flow from operations improved to 234 million. That was an increase from 196 million from the same quarter the previous year. So DocuSign increasing cash flow from operations by 38 million compared to the same quarter last year. That's a significant increase, more than 10% year over year. DocuSign has an excellent balance sheet, 1.3 billion in cash and no long-term debt. That's increasingly becoming important because interest rates are much higher this year than they were last year. That means DocuSign can use this $1.3 billion, invest it in government bonds, and earn a rate of return near or a little bit above 5%, depending on how far along they go on the maturity spectrum, right? So 5% on $1.3 billion is a good deal of money. DocuSign interest income will be rising this year compared to last year. DocuSign forecasting second quarter revenue of 677 million, so an incremental increase compared to the previous quarter, and it will also be a year-over-year increase, and billings of 651 million. For the full year, DocuSign is forecasting revenue of 2.72 billion and billings of 2.75 billion. It's excellent news that for the full year, DocuSign is expecting billings to exceed revenue. That means DocuSign's revenue growth is likely to pick up starting in the third and fourth and maybe first quarter of 2025. So revenue growth has slowed down for DocuSign ever since economies reopened and people were not afraid of meeting in person to sign documents. but now it looks like management is expecting growth to pick up again, starting maybe in the third quarter of this year or maybe in the first quarter of 2025. But it's good news nonetheless. All right, to update my recommendation going into this report, I had DocuSign rated as one of my top stocks to buy in 2023. I'm keeping DocuSign there. I still think DocuSign is one of the best stocks to buy right now. The company's long-term prospects are excellent. It's just so much more convenient to sign your documents electronically than having to meet in person to do this. I just think that long-term advantage, that long-term tailwind will continue to support DocuSign and DocuSign stock. All right, that's all I've got for this video. But if you want my full list of top 20 stocks to buy right now, I've got it. Link should be popping up on your screen right now. So please click on that video and I'll see you over there. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.